Good morning, everyone. Welcome to the TradeStation Masterclass. Thank you for taking time out of your schedules to be here and learn a little bit about TradeStation. We're going to talk about this topic on technical analysis, specifically key reversals and pivots. As usual, we do the introductions to this class. My name is Jesus Nava. I am the Director of Education for TradeStation Securities. For me, it's always a pleasure to talk about TradeStation and show you how you can take advantage of the TradeStation technology to do what you do best, which is trading the markets. I do want everyone to be aware that online trading is risky, that this presentation is done for educational purposes only. It is not a recommendation of TradeStation, that past historical performance is no guarantee of future results. We're going to take a look at some strategies and how you can use some of the tools in TradeStation to measure performance. But I do want you guys to be aware that what you see in a historical report does not mean that that's going to happen exactly going forward. And also, you have all the disclosure information here in front of you. If you guys have any questions about the details, just go to the link right there towards the top, www.tradestation.com/important-information. Thank you guys for being here. And I'm going to just switch over to my TradeStation platform and start talking about what we came here to learn, which is key reversals and pivots. TradeStation has always had key reversals and pivots as part of the lineup of studies that we provide everyone. In fact, TradeStation has some strategy components that are based on the key reversal and the pivot idea that you can start using right out of the box. So I thought that today's presentation, we would take a look at what is available on the TradeStation platform in the area of key reversals and pivots so that we can understand and at least the technology side of these tools so that we can start implementing them going forward. So let's go ahead and take a look and get started with key reversals. I'm going to go here to studies and I'm going to click on add study. A key reversal, by the way, is a study that TradeStation created in a different category than indicator. And most of the things that you use in TradeStation charting, it's probably in the list of indicators, but key reversals are in the show me category. The reason for that is because show me's are a type of analysis technique in TradeStation designed to pinpoint events that happen on the chart historically. This could be, events like earnings. It could be events as a bar pattern, like this key reversal is a bar pattern, and it identifies it on the chart. So we'll use these show me's as ways of pointing out certain areas or certain bars or certain candlesticks that meet certain criteria. You find them right there in the show me category. I'm going to first take a look at key reversals down. I mean, they're in alphabetical order, so I'll pick the top one, which is a key reversal down. I'm going to click on this little checkbox that says prompt for editing, because I know for a fact that the little dot for the show me is sometimes a little bit small for presentation, and I just want to make sure that it's big and you guys can see it right here in this class. I'm going to click OK. So I'm going to check the style of that dot. I'm going to make it, almost the biggest one, not quite the biggest. And for color, you see the color is red. So sometimes it gets mixed in with the red candles, which I don't like. I like it to stand out. So I'm going to choose a color like, let's select a cyan. Here it is, very different than what the bars are. So here on the chart, you see a few dots scattered, on all these different candlesticks. Let's go ahead and understand what a pivot. I'm sorry, this is a key reversal. I started, this morning I started doing or preparing for the class that I kept on switching between pivots and key reversals. They're very similar in what they do, and that's probably the reason why I get them mixed up. But this one in particular, we're looking at a key reversal down. And of course, the key reversal down, the fact that it's named down, it's because there's an inclination or an expectation that the price will continue on that down movement. Let's see why. A key reversal down is a bar pattern that looks at the bars that are before it, at the bars that are after it, to see if it's able to identify that significant price. A key reversal down, if you think about the shape, it's going to have that A or pyramid shape where the pivot is right at the tip of that pyramid or that tip of that A formation. So a lot of these show me dots that we see here for the key reversal down are trying to identify those patterns. Now, let's go ahead and take a look in detail. What is it that makes a key reversal down on TradeStation? Because the variations are numerous, and you're going to find definitions of key reversal that are very similar, but not quite the same. So what is it that we define or TradeStation defines as a key reversal down? For that, we need to go into the details of that, study and see what is it trying to identify. When I went over here to studies and I went to add studies and I clicked on show me and I highlighted the key reversal down. Here we go. And you can do this for every study that is part of the TradeStation platform. I'm going to go here to the definition and take a look at what is it that we have for this indicator. Okay, so here we have a numeric input. It's looking for the number of bars used to calculate the highest high. The default is 1. So a key reversal down marks the high of any bar whose high is higher than the previous bar's high and whose close is lower than the previous bar's close. All right, and a key reversal down pattern can signify the end of an uptrend and when confirmed by increases in trading volume. So let's go back here to my key reversal. And the introduction that I made about the A pattern or the pyramid pattern, then I told you this at the very beginning of the presentation that I was, for some reason, I was mixing them up and I mixed them up again. A key reversal is a bar pattern. It takes 2 candlesticks to identify this key reversal. So what I said about the pyramid, we're going to get to in a little moment once we start talking about pivots. But in this particular bar pattern, we're looking at 2 candlesticks. That's it. And what it happens is that for the most part, you have prices going in a certain direction. Like for example, right here, let's concentrate on this one up here. I'm going to use my magnifying glass to enclose this area. This is something that everyone can do on your TradeStations as well. I'm not sure how many of you use the magnifying glass, but if you come over here towards the bottom, you're going to find a zoom in and zoom out little button. Makes it very useful if you want to concentrate in one area and not have to change your bar spacing. So let me show you again. Let me zoom out, see how it goes back to the way it was. So you may be looking at a chart, and saying, I really want to pay attention to this area. Let me go ahead and click on my zoom in, draw a box by clicking and dragging. You click and drag and draw a box around the area you want to look at, and then you kind of analyze that section, and you can zoom out and not lose your spot or the way that you were looking at the chart. So this is the key reversal down. And the definition of a key reversal down is that you have a high. In this particular case, we're looking at the high of this red candle, higher than the previous bar's high. And then you have a closing price that is lower than the closing price of the prior bar. So that's a key reversal down. Very simple bar pattern. It doesn't include a lot of history. It's just looking at 2 candlesticks. And if you have that movement in one direction, in this case, we saw that movement pushing towards a high of the day or higher in the in terms of price. The price was moving higher, but all of a sudden we have a closing price that doesn't really translate in that upward movement because it actually closed lower than the previous close. In terms of a key reversal up, we're going to have a very similar description, but in the opposite way. So let's go ahead and put those in. I'm going to come down here and zoom out, and let's add the other one. I'm going to go to studies, add studies, show me. Key reversal up is the one we're going to look at now. I have the little box here for editing because I want to make sure that the style is a little bit thicker, and the color, I'm going to make it yellow. So now take a look at the yellow buttons. The yellow dots are going to be put at the low of the bar. And let me just concentrate on one. I'm going to click on this magnifying glass one more time, and I'm going to draw a box right here. Okay, so we have the opposite behavior. Now we're not looking at the highs of the price, even though this is called a pivot, this is called a key reversal up. We're looking at the lows of the bars because what the formation is telling us is that there could be a price reversal to the upside, even though we're looking at the lows. It's kind of contradicting, but it is what it is. It's a key reversal up, meaning that the price has a there's a representation of the price coming down. So we see a low lower than the previous low, but all of a sudden the closing price of that candle closes higher than the close of the prior bar. So it seems like the price is reversing. TradeStation has a couple of strategies that go along with this concept. Notice that we haven't changed the inputs. We're still on default, but the key reversal that we just used here can be changed, and you can make it a little bit more strict. As of now, it's just looking at one bar back. But if I go to the settings on any of these studies, let me show this to you before we even go to the strategy. Let me right click, and I'm going to go to key reversal down. If I go to the inputs, I can change the length here to look at more historical bars. Let's see what effect this the indicator has if I were to change this. And for that, I'm going to change the number here. I'm going to change it to 3. And I want you guys to take a look at this area right here where we have consecutive. Well, this would be always true. Let me see if I change it to 3, I just want to see if any dots here disappear. I'm going to click OK. No dots disappear here because we were on a continuous uptrend. So as long as the prior bar is lower, or 2 bars ago are lower, or 3 bars ago are lower, we're going to be good. Let me go ahead and zoom in this area because we changed the strength of the key reversal down to 3 bars. So it's not only looking at the prior bar, it's looking at 3 bars ago. But if you look at, these 4 consecutive key reversal down, all the previous highs are lower. So we have a higher high than the previous one, higher high than the previous one. And as long as we meet that condition 3 consecutive bars, it meets the condition of the key reversal up and it marks the bar. In some areas where you don't have this prominent uptrend, we may see some dots disappearing. Let me go back in there and take a look. Let me go here to edit studies, change this back to 1. And see, I'm not sure if you noticed, but I want you guys to take a look at this area where my cursor is moving. We have 2 dots right here. We know that the trend is not as clear as in the area that we were looking at just a moment ago. We had a very clear uptrend. Over here, the market is kind of moving sideways. So if we increase the strength of the key reversal, of course, we're going to wind up removing some of these dots because there's no consistent uptrend or downtrend that would make my criteria true. So if I change this key reversal down to 3, like it had it earlier, before I click OK, I want you guys to keep an eye on these 2, show me dots and see how they're going to disappear. I click OK, and then you go. It simplifies the view because they were okay by looking 1 bar back. But if you go back 3 bars, then the criteria is not true anymore because the prices, there's no significant trend, or, prices are just moving up and down. So the criteria is not met any longer. Let me switch it back to, in fact, let me leave it at 3. Now I'm going to change the key reversal up to 3 as well, just to give these dots a little bit more strength. So in here, and as I noted at the beginning of the presentation, we have a strategy that allows us to test, these ideas and see if a key reversal is an idea that we would want to trade. A lot of times I have seen a lot of strategies use the key reversal as a component to a strategy. That's one of the reasons why TradeStation always talks about strategy components, because we want you to take these ideas and put them together into something that is a little bit more robust, in the sense that is looking at other criteria to make sure that you have a confirming signal. So would somebody trade the key reversal by itself? Maybe. It's up to you. But then again, you need the necessary tools and software to allow you to test this idea and see if it's something that provides you the confidence to trade forward. If I come over here to studies and I go to add strategy, let me see where those strategies are. I'm going to go here to key reversals. All right, we have 4 of them. LE, LX, SE, and SX. If you've been with TradeStation for some time already, you know what those mean. LE is long exit. We have the long exit, the short entry, and we have the short exit. So that's what the little letters at the very end mean. So depending on what you want your strategy to do, you can choose one or the other. If I choose, let's choose the long side of the strategy, the long entry and the long exit. I could probably, if you wanted to, you can select both sides of the strategy, the entry or the long and the short, and have the strategy reverse your position from short to long, long to short. You're always in the market like this, but let's go ahead and test it just on the long side and see what we get. So long entry with a long exit. Let's click OK. All right. If you take a look at the inputs of this strategy, we're using similar inputs like in the key reversal, because the strategy is pretty much designed on the premises and the criteria that the key reversal is looking for. So here I'm going to switch it to 3 just so that it matches my indicator. And that way I'll see how my strategy aligns with my show me dots. I'm going to click OK here, double click here, and then make this a 3. And here we go. All right, so what's going on here? We see that we don't have a signal for every single dot. Well, the first thing that jumped at me is that this area right here, you see where we have a sequence of blue dots. These are key reversals down. We have nothing going on. The reason for it is because, just remember, we picked the long side of the strategy. So these key reversal down, of course, are not going to generate any short entries. So those are pretty much ignored. The only way that, or the only reason why the key reversal down here are being used is in the form of an exit. So for example, right here, let me zoom in this area so we can see this a little bit more closer. Okay, here we go. So right here, we have a key reversal up. The pattern is pretty much found. It looks at 3 bars back, 1, 2, 3. We have a sequence of lower lows. That's very visible here. And then the closing price of the candle is higher than the closing price of the prior candle. So it met the criteria of the key reversal down. And as soon as it did that, it generated a long entry for the next tick, which is the opening price of the bar. Does that make sense? So now we are in a long trade, and then all of a sudden, we get a key reversal down. Why is it a key reversal down? Because we have 3 consecutive higher prices, and then the closing price is lower than the previous one. So this is a key reversal down. What does the strategy do? It generates an exit. This is my key reversal long exit. So that's what's happening on this strategy. It's using the key reversal up to go long, and is using the key reversal down to exit my trade. All right, this particular strategy, oh, that's a terrible trade right here. I can clearly see it. So that was a big losing trade, because we're basing our exits, on the other side of the key reversal. Maybe that's not the optimal way of exiting the strategy. I was looking, at the most recent trades here from, this is July of 2022, I think. Yeah, this is a Walmart chart. I was looking at all these trades and I saw a lot of blue, and all of a sudden I squeezed the chart and I said, well, these are very big losing trades over here. So how do we pull up a report? We go here to data, bring up the strategy performance report. And I can see that this is a 2-year historical back test. I always look at here at the title bar of my strategy performance report, just so that I can confirm that I'm looking at, what historical period I'm looking at. This is a daily time frame, looking back 2 years. And how many trades were generated here? Let me go ahead and click on collapse here on the right-hand side. The total number of trades is 20. Not a very good size for me to make a decision as to whether this strategy is good or not. The profit factor is 0.74. So for every dollar that we lost, we made 74 cents. So of course, that's why it just turns into a losing strategy. So there's got to be more work done on this strategy for it to be tradable. Maybe, as I pointed out at the beginning, the exits based on that key reversal, down was not the best option. Let's go ahead and take a look at other things we can do. The nice thing about having a strategy here is that you can optimize certain components, because if you think about it, I was using the key reversals, but I was kind of arbitrarily choosing how many bars to look back, the strength of the key reversal. The default is 1, looking 1 bar back. And for this example, I made it 3 bars back. Look 3 bars back. It just sounded a little bit better in my mind. Clearly not so good here in practice. But then the question is, what is the optimal value? What value would you pick? What value would you think it's a strong parameter to use? That's when optimization comes into play, because it allows you to cycle through different parameters in order to find things that are optimal. Not because they're the values that are going to make you, a winning strategy, but the values that make sense for a particular backtest period. So what I'm going to do here, I'm going to show you that very briefly, because I know that the main topic of the presentation is key reversals and pivots, but I do want to show you all the different tools available for your testing and your decision as to what is the technical idea that I want to use in my trading. So here in studies, I'm going to go click on edit strategies. I'm going to edit the strategy. I'm going to come down here, customize it. And here's the length. And here's the optimize button. I click on optimize, and I can optimize from 1 all the way to 10. Let's try 1 to 10. So it's going to test, 1 bar back all the way up to 10 bar backs, and everything in between. It's going to tell me which number was optimal for this backtest period and also for this specific security. This is Walmart. That's one of the things that I always, try to emphasize when I talk about optimization, is that this is a very specific example of historical movement and a particular security. It doesn't mean that if you find something optimal here for Walmart, it's going to work great for Microsoft or Apple, because it doesn't work that way. But let's just take one step at a time. Don't want to go here on a tangent about best practices for optimization. So 1 to 10 increments of 1. I'm going to do the same thing for the exit. Optimize 1 and to 10. And then this is 100 tests that is going to generate. I'm going to optimize. And there we go. So now when I come back here, I still have that very long losing trade. So we need something to actually help us, recover from that trade, maybe with a stop loss or a trailing stop, whatever it is. So this is still not a strategy that I would trade. I wouldn't want that losing trade in my trading activity, but it did make the overall performance a little bit better. Now, what are the parameters that it picked? Well, let me go back in here to studies and edit strategies. And you can see that for the entry, it picked 3. Actually, we were not so far off. What was off is the exit. So it actually picked a higher number for the exit and made it a 7. Of course, if I still go to my strategy performance report, it's still a losing strategy. It's not losing as much. My profit factor is better. The number of trades is less. We had 20 before, now we have 13, which is not the right way to go. Now, if you're trying to analyze a strategy, I would at least want to see 30, 40, or 50 trades right in here in my sample. Not a good way to start. But I did want to show you that you have a way of testing parameters and making sure that that's the right parameter for this particular strategy. All right. So key reversals, that's what they are. We're looking at a bar formation. By default, it looks at 2 bars. Okay, this is just to recap. You can increase the length, meaning that you can increase the strength of that particular key reversal by looking back more bars. It's up to you to do that. But the default one is just looking at 2 bars. You know, if you have that indication that the prices are going up, but then the closing prices don't really support that, that's a key reversal down. And on the opposite side, if you have the prices coming down, and then all of a sudden you have a closing price that closes higher, then that's a key reversal up, because that downward movement is not being supported anymore, and the closing price higher, the higher closing price is an indication of that. Okay, let me clear out my chart of everything that I added to it. Let me remove the strategy. And I'll remove the other one because I wanted to show you our pivots. Let's go here to add study. Let's not confuse pivots with floor trader pivots, because that's a different mathematical formula and a different approach to that technical idea. Pivots that we find here on TradeStation is what we usually refer to as swing highs or swing lows, very similar. But here on TradeStation, take a look. It's going to be a show me. Here it is. Pivot high and pivot low. Let's go ahead and put them both on the screen. All right, I'm just going to go to the style again, make them a tad thicker. This is my pivot high. I'm going to make that magenta and click OK. And for my other one, I'm just going to make the style thicker, and the color, I'll make it yellow. All right, so pivot highs and pivot lows. So here, this technical idea is the one that we refer to as that pyramid shape or the V shape, because we are looking at both of them. So the A, meaning that there's always a tip, that's our key, that's our pivot high. Notice that I'm going back to the key. It's just my mind is just playing tricks on me. Let's drop the word key. Now we're looking at pivots. So we have this A formation that has a tip. That's my pivot high. And then if you have a V shape, that lowest point that's your pivot low. All right. And that's pretty much what this indicator is doing. Now, one of the drawbacks of this, let me just take a look at some of the chat comments here. And I run my strategy in Pine script. Malik, unfortunately, TradeStation only reads easy language. So if you have access to the code of your strategy, it would have to be reworked, maybe rewritten using easy language so that it works on the platform and you can start using it. But it does need to be reworked. Can I apply the same? Okay, same question. Yes. So again, yes, Pine script, I don't think it's compatible with TradeStation. Easy language is TradeStation's proprietary programming language. So the only language that TradeStation supports is its native language, which is called easy language. All the technical analysis in TradeStation are written using easy language. You can open them up and see how they're written, including the key reversals and pivots. They're all written using easy language. Perfect. So let's go ahead and take a look at this indicator and what it's looking for. Again, if you go to studies and you click on add studies and you go to the category that you're looking for pivot high and pivot low, you can click on definition. Now, pivot high and pivot low, you have some inputs that are looking for a left strength and a right strength. And the offset ticks, number of price ticks to offset the plot from the pivot high. Yeah, so this is what's going on. On this formation, the A shape or the V shape, where you're looking for these pivots, it's not until you are a number of bars separated from that pivot that you can actually identify it. Remember that, yes, a pivot high, in this case, let's talk about a pivot high, has a sequence of lower highs and lower highs on either side of that pivot. But it's not until you're able to go past that pivot, the bars that you're trying to confirm it by is that you're able to say, oh, I just passed a pivot high, but it's already a little bit too late, right? I mean, it's a lagging indicator, but it's a way for you to identify this pivot highs and pivot lows. And the inputs allow you to specify how strong you want these pivots to be. So let me go back in here into my trade station. Because the default value is 3. So on every pivot that is identified here, you're always going to find on a pivot high, in this case, for every pivot high that you find, you're going to find 3 highs that are lower than the pivot and 3 highs that are lower than the pivot on either side of that price that is being identified. So it's impossible for this particular setup of for this particular technical idea for you to be able to trade tops and bottoms, because the nature of the indicator makes it wait a few bars until it gets confirmation that there's a pivot high or a pivot low. So again, impossible to trade where those dots are. That's the reason why the indicator itself gives you an offset mechanism so that you can offset the plot to where the pivot is actually identified. Now, visually, of course, having the dot aligned with the pivot, of course, helps you visualize where those pivots are. But in reality, you're not going to see that yellow dot or that cyan dot exactly where the pivot occurs. Okay, so let's go ahead and take a look at some other mechanisms here. Donald's asking, can we say a key reversal is formed quicker than a pivot? It all depends. It all depends. And yes, it is quicker because at the lowest time frame that a key reversal can be set which is 1, you're looking at 2 bars, 1 bar back. On a pivot, if you make it the lowest, which is a 1, it looks at 1 bar before and 1 bar after. So technically, a pivot requires 3 candles to identify its formation. So it's always going to be it's always going to require 1 more bar than what the key reversal requires. But again, it all depends on what strength you want that pivot or that key reversal to use. In this case, the pivots are using 3 bars to the left and 3 bars to the right. Can we say all pivots have a prior key reversal? Yes, they could be, because in a pivot high, remember that we're looking at a higher high, and that's part of the key reversal condition. But then we are looking at the closing price that needs to go in the opposite direction more than the previous one. And most of the time, you find that same scenario right here on the pivots. So yes, I would say I would have to look at different areas just to confirm that. But yeah, technically that's what we're saying. The pivot and the difference in the pivot is that we're looking at bars after that pivot high or pivot low. In strategies, do we have a pivot strategy? Let me go ahead and take a look. Studies, add strategies. Let me go here to the P's. We have a pivot extension and we have a pivot reversal. So let's go ahead and take a look at pivot extensions. And again, a lot of these, elements or components that are part of the strategy list are defined or explained in the definition button. So don't hesitate to highlight any of these and go to definition to just refresh your memory. Sometimes I have to do it myself. I look at so many different indicators and so many different technology inside of TradeStation that I have to go back into the documentation to just be sure that that's exactly what it's looking for. This is the pivot extension LE. When I was reading this morning, this is very similar to what the show me does, where you have a left strength and you have a right strength. In this particular case, notice how the left strength is set to 4 by default and the right strength to 2 by default. Maybe it's looking for a little bit more strength on the left hand side and then have a quicker response on the right hand side and only wait for 2 bars. Those are things that you can test on TradeStation and see if that's something that makes sense. The show me looks at 3 and 3. The strategy is looking at 4 and 2. But let's go ahead and put that here on the chart to see what it looks like. I'm going to put the 2 extension strategies, long entry and short entry. But I am going to match the through. Let's see, which one do we match? Do we match the strategy to the show me or the show me to the strategy? Let me do the show me to the strategy. I'm going to leave the strategy as it is, 4 on the left, 2 on the right. And I'm going to come over here to the show me so that it aligns with it. So left strength is 4, right strength is 2. Okay, and for the yellow dots, we'll do the same. Left strength is 4, right strength is 2. That way we have the dots aligning with the strategy. So what is the strategy looking for? And this morning when I was looking at the strategy and I was saying, well, this strategy doesn't really align with my show me dots. And let's look at some examples here. The pivot is identified back here. This is a pivot low, right? You guys see it? It has 4 bars on the left and it has 3 bars on the right. Clearly identified by the show me dot, the yellow dot. But look where the entry is. The entry is all the way over here. So you get to a point and you say, well, what is the strategy really doing? For me to really understand what the strategy is doing, well, first of all, I needed to read what the strategy definitions said. And I think we have some indication of what it does there. So I'm going to go here to add strategy, pivot extension. I'm going to go to the definition. It says low entry based on the occurrence of a low pivot point. Doesn't quite give me the details that I'm looking for. Where is the entry generated exactly? For the next bar. So if you read the definition or the description, it doesn't really give you the details as to why my entry is right here. I know that, my show me was able to identify this pivot based on my condition, but my entry here is generated because, let me right click on the entry itself. I'm going to go to edit easy language for strategy, and I'm going to go to the pivot extension long entry. So when I open up the development environment, this is what drives every indicator and strategy in TradeStation. And I look at the code. Yeah, this is buys next bar at market. But the reasoning for this is the following. What we talked about earlier, that we don't have confirmation of the pivot highs or the pivot lows until the bars that confirm the right-hand side. If you guys remember, we made the show me look at 4 bars back and 2 bars forward. Now the show me is going to be back plotted to where the pivot is, but the strategy is not. The strategy is just going to generate the order for the next bar. So once the pivot is identified, we are already on this 3rd bar, and that's where the entry is generated. That's exactly what's happening here to this strategy. It doesn't mean that it's delayed. It just means that the pivot show me's have been back plotted to align with the pivot. So it's something to be aware of, and it just clears the understanding that this is a lagging indicator, and at the time that we confirm that there's a pivot, we may not be able to get that lowest or highest point. Exactly, Yusuf, exactly. So, but it's still a very good strategy. Very good strategy in the sense that it's an idea that you can test on TradeStation. It's a working idea. We still have that big issue with that long losing trade back in history. But if I go to my strategy performance report again, a losing strategy. We have more trades to look at, so we have a good sample of trades. And I think what's hurting the strategy here is that big trade in the past. If you look at the largest losing trade, well, let me go back, I clicked on it. Largest losing trade is 26.97, and you can see that's a big chunk of our losses here. So that's one of the things that is hurting our strategy immensely, and that's an area that needs attention. So just wanted to show you the strategy, how it behaves. Let's take a look at the other one though, because everybody saw a different strategy, right? This is the extension strategy. Let's look at the other one. So let's go studies, add strategies. This is the reversal strategy. And this only has one input, which is the strength. I think this is only allowing you to have one strength, and it's going to try to do it on both sides. Let me go ahead and click on close here. And that's exactly it. Remember that on the pivot extension strategy, the trade was right here. So now it's waiting for additional bars to happen. Not only that, but this is our long entry and this is our short entry. This is a strategy that is looking at things a little bit different. And if I go here to the list again, let me go here to studies and add strategy. And I'm going to select the reversal one and go to definition, because I think this one does give us a little bit of detail. So long entry based on a breakout of a pivot high point. So that's our long entry. The long entry is looking for a pivot high point. Look at my strategy here. That's exactly what's happening. And I'll explain what the strategy is doing. This strategy is going to take a long entry on a reversal. That's why it's labeled reversal. And that's why it pretty much trades against the pivot. You know, when you have a pivot like this, you either are going to take two approaches. When you have a high pivot or a pivot high, you're either going to continue with the trend or extend the trend. That's why you have the other strategy that's called extension. But this one is the pivot reversal, where you have a pivot high and the price reverses. So what it's doing is looking at this pivot high and setting that as your entry, or using that price as part of the entry. If I want to go to the specifics, I want to right click, go to the easy language for this strategy and open up the long entry. Notice something here really interesting. All right, here it is. The buy command, buy next bar at pivot high plus 1 point. 1 point stop. This is syntax that allows you to look at a price that happened historically and then add a point to it so that it constitutes a breakout. It's not only touching it, it's actually breaking it by adding a point to your pivot high. So if I go back here to my trade station and I check the price of this pivot, everybody sees the price right there at the bottom of this data tips window, 145.62. If I check the price here of the entry, right there at the bottom, buy 100 at 145.62. This is actually the same price. That's interesting. I would have expected it to go 1 point higher or lower, but it actually bought at exactly the same pivot high. Not really sure why it did that. Let me look at a trade here in history. So in this short trade, let me look at another one here to compare. On a short trade, we're looking for a pivot low. It records what the price is of that pivot. This price is 141.72. And then when the price breaks that low, so this is 141.72, the short is done at 141.72. So there must be a reason why it's doing that exactly. Let me take a look at the strategy here. Customize. This is just the strength of the pivot. Why is it filling at exactly the same price? That's a good question. Based on the code, there's no other buy command. The buy command is next bar at pivot high plus 1. if I look at the short side, let me right click on that red arrow, easy language, pivot reversal, short entry, then the sell short command, next bar at pivot low, -1 point, stop. I only have the two. So what Jusev is suggesting is that it takes the high and the low of the previous candles into consideration. Still, yes, I see your point, Yusef, but still, if I look at, this lowest or this pivot low, there's not going to be a low that is lower than that low. And if the strategy is subtracting a point from my low, which is 141.72, I would have expected, my entry to be at 141.71, 1 point lower than the pivot low. But that's something that I can address later. You can see how the strategy is there for you to test different scenarios. And of course, one thing to point out too is that these pivots, I think I know what the problem is. I think these show me's are not set to the right strength as my key reversals. So let me do, I think it's 4 and 4. The strategy, let's see what the strategy is set to. The strategy is set to 4. The pivot highs are set to 4 and 4. Let's do this. But still, in this particular example, that is still the pivot high. That's still the pivot low. So when it broke that price, it generated that short entry. The best strategy, if you look at it, if I squeeze the chart here, you can see that there's a mixture of reds and blue on my strategy backtest. So it's not even worth, looking at it, but it's still a way for you to have a strategy that is already created and coded for you, and use some of the content of this strategy in your own testing and your own analysis. So the differences between those pivot strategies, the pivot extension, is because you expect the price to continue on what the pivot is representing. If you have a pivot high, you have that expectation of the prices like continue to drop. But then you have the other one, which is a reversal, is taking those pivot points and then keeping track of that value to see if there's a breakout to the upside or the downside. So use those, to learn a little bit more about pivots and those conditions. Let me see if there's any other strategies here or indicators that I wanted to show. I believe those are the main two that I wanted to highlight. I know there are different variations in TradeStation of other studies that look for similar things, but I wanted to make sure that everyone has the basic idea of what a key reversal and a pivot point is right here on TradeStation. We have a question here from Malik. Can we test strategy on historical data too? For sure, Malik. Testing on historical data is exactly what we just did. You have a strategy. You can use, the strategies that are built in to TradeStation, like studies, add strategy, which is what I did. I added, the pivot reversal strategies on this particular example. And once you have the strategy in place, then it's just a matter of going to data and strategy performance report. So it happens automatically. So you can see how bad this strategy is. It only has a profit factor of 0 or 34 cents, which is pretty bad. If you ask me, this is one of the first times that I see a strategy that is so bad. But you just have to look at the amount of historical data that you have on the chart, and that pretty much determines your historical backtest. This is a 2-year historical backtest, but if I load, let's say 10 years, this is 10 years of data, then I load up my report, and then it uses those 10 years. Notice here on the title, it says 2013 to 2023. And of course, that doesn't make the strategy any better, a little bit better, but still a losing strategy. All right, awesome. And of course, you can create your own strategy. The idea of us coming on here and showing you, the key reversal strategies and the pivot, strategies is for you to be aware that everything is open. You can open up the code, you can see how it's written, you can see how TradeStation approaches the idea, and then you can build on top of that. But the whole reason why we have easy language is for you to create your own strategies and use a lot of these components into your own development. All right, guys, this is my class for today. I want to say thank you for your time. Thank you for joining us today. Check out the calendar of events. We have great things coming up, and Manolo is going to share that link right here in the chat for things that are upcoming. We are working really hard to make these presentations available faster in terms of the recording, I mean. So hopefully we'll get a process in place just to get those recordings to you faster, as it's been faster than what's been happening in the past few weeks. I know that sometimes it is a struggle, but if there's anything that you want to watch in an archive mode, let us know. Send an email to education@tradestation.com. Manolo will share that email address as well here in the chat, and we'll make sure that you get the content and the resources that you all need, okay? Thank you for your support of the TradeStation Masterclass, and I hope that everyone has a wonderful afternoon, and I look forward to seeing you in my future event. Goodbye, everyone. Great having you.